Hello friends, welcome to today's session. Today's session is an introduction to the concept of interest on capital. Now, in this session, we'll be dealing with the term interest on capital to understand what it means, it is allowed by whom to whom, and why it is allowed. And also, a simple illustration to understand this concept will be explained to you. Further videos would be uploaded for detailed discussion of interest on capital computation. So to understand first the meaning of the term interest on capital, you need to know that interest on capital is allowed to partners for contributing capital to the firm in excess of their profit sharing ratio. So from this, what do we understand? We understand that here the firm allows interest on capital. It allows interest on capital to whom? To the partners. So partners here get interest on capital which gets credited to their capital or current account on the basis of the method of capital system maintenance they are following. It will get credited into their capital or current account and will be allowed by the firm. It is an item of appropriation of profit. What does this mean? It means that this item of interest on capital, you will normally find it in the profit and loss appropriation account, where out of the net profit, a certain portion would go to the partner as interest on capital. Further, you need to understand why this interest on capital actually came into existence. Why do you think it is required that interest on capital should be given to the partners, allowed to the partners? So for that, let us understand the reasons for allowing interest on capital. The first reason for allowing interest on capital is normally when the profit sharing ratio is equal, the capital contributions are different. So to understand this particular concept, let us take a simple example. Let us take that there are two partners. Let them be Anshu and suppose the other one is Kirti. Now with these two partners, suppose their capital contribution were, say, rupees 5 lakh was contributed by Anshu and 1 lakh was contributed by Kirti as their capital. Suppose the profit that was earned during the year was 2 lakh. Now without interest on capital, what would happen? This available profit would get divided in their profit sharing ratio. Therefore, without interest on capital, both of them, this 2 lakh of profit would get divided equally as 1 lakh to Anshu and 1 lakh to Kirti. This would be their share of profit. This is how the profit would get distributed. But on the face of it, when you look itself, you find that the capital contributions are different. Anshu has brought in 5 lakh rupees, almost 5 times the capital contributed by Kirti. But Anshu is going to get the same amount of profit which Kirti is going to get. So Anshu is not going to be very happy about it. That although he has contributed so much more than Kirti, he is getting on terms same as what Kirti is getting by contributing just 1/5 of the capital that Anshu brought. So that is why interest on capital concept came into existence, where suppose we take the case that interest on capital is to be allowed at the rate of 10% per annum. So if we take interest on capital to be allowed to partners at the rate of 10% per annum, then what happens out of this net profit of 2 lakh that you have? Interest on capital at the rate of 10% per annum, Anshu would be entitled to 10% of his capital of 5 lakh. So 10% of 5 lakh. That would be 50,000 rupees. And then 10% of 1 lakh for Kirti. So Kirti would be entitled to 10% of 1 lakh, 10,000. So what happens out of the net profit? 16,000 gets distributed in the form of interest on capital. So what is left? That would be the divisible, or we also call it as distributable profit. So this profit would get divided in the profit sharing ratio, which is in this case equal. So it will go to Anshu as 70,000 and to Kirti it would go as 70,000. So how much does Anshu get at the end? He gets 50,000 plus 7. So Anshu would be getting totally 50,000 as interest on capital plus 70,000 as a share of profit, rupees 1,20,000, whereas Kirti would be getting 10,000 as interest on capital and 70,000 as a share of profit, that is rupees 80,000. Now this seems to be more fair than the one where there was no interest on capital. So that is why one of the reasons for like interest on capital is profit sharing ratio is equal, but the capital contributions are different. Allowing interest on capital would make it a better method of distribution of. I hope that is clear. Now moving on, let us understand the next reason. There's one more reason here, that when the profit sharing ratio and the capital contributions are different. So they are having such like, let us take one more example here. Say there is Amrit and Brahman, two partners. Okay, they have brought in capital amounts of 5 lakh and 2 lakh respectively. This is the capital amounts which has been brought in by these partners, and suppose the profit sharing ratio is 3:2. Now see, the capitals are different and profit sharing ratio is different, and they are not in the same ratio as well. Now everything is different here. If you take this case, if there was no interest on capital allowed and there was a profit for the year, say of rupees 2 lakh that particular year. So with no interest on capital, what would have happened? Amrit would have got 3 by 5 of the profit of 2 lakh, and Brahmit would have got 2 by 5 of 2 lakh. That is in the profit sharing ratio. So 5 ones are, 4s are. So rupees 1,20,000 would gone to Amrit and 80,000 would have gone to Brahmit. This would have been the way. But suppose interest on capital at the rate of 10% per annum was to be allowed to the partners. Then what happens? Then the interest on capital to be provided to Amrit would have been at the rate of 10% on 5 lakh. That would have been rupees 50,000. That is this capital. And to Pramit, 10% on 2 lakh capital that he contributed, 20,000. So totally 70,000 would have been the total interest on capital allowed to the partners. So therefore, out of the net profit for the year of rupees 2 lakh, what happens? The amount of interest on capital would be 70,000. So you'll be left with 1,30,000. This would be what? It would be called as divisible or distributable profit. Means a profit which would be distributed in the profit sharing ratio. So this would get divided in 3:2 ratio. So now let's divide that. So Amrit would get 3 by 5 of 1,30,000 and Brahmit would get 2 by 5 of 1,30,000. Let's calculate this. 5 ones are 5 twos are 3. 6 are 26,000. 0, 0, 0. 18, 1. 78,000 would be Amrit share of profit. And the same thing comes here. That would be 52,000 as share of profit of Brahm. So this is the share of profit. So ultimately, how much does Amrit get? As interest on capital, he gets 50,000 and he gets share of profit of 78,000. He will get totally 1,28,000. And what would Brahmit get? He would get interest on capital of 20,000 and share of profit of 52,000. So totally 72,000. So this way you see the distribution seems to be more equal. On the basis of capital extra contributed, Amrit will be getting more compared to Pramit, and then whatever is left, that would get divided in the agreed ratio of profit sharing. So this way it seems to be more equitable. So this is another reason. And finally, there's one more reason. The other reason, last reason that could be for providing for interest on capital is where the capital increases the earning capacity of the firm. So sometimes it so happens that the business is such that with more amount of capital you have, you would be able to earn more. Earnings might improve or increase. So in such cases, when a partner is bringing more capital, then it is because of his contribution of more capital that the firm is able to earn more profit, and therefore logically it seems appropriate that the one who has contributed more capital, who has enabled the firm to earn more, will have to be compensated, and that is why interest on capital is provided, and that would ensure that the one who has contributed more capital would get larger share in the net compared to the one who has contributed lesser amount. So these are the reasons for allowing interest on capital to a partner. Now moving further, let us take one simple illustration to understand about the computation aspect of interest on capital. This is a very simple question where we have a partner, Vikram. He is a partner. He has introduced 10 lakh rupees as capital on 1st April 2021. Then he introduced further capital of rupees 2 lakh on 1st October 2021, and he withdrew 1 lakh out of his capital on 31st December 2020. He is supposed to calculate interest on capital at the rate of 10% per annum. Now I will be using two different methods to show you the computation. The amount of interest on capital would come out to be the same, but there are two different ways in which you can compute. So whichever method you find which you can understand, which you find simple, you can adopt that. There is no problem. So first, let me start with the first method of computation. Now, we said this partner brought in 10 lakh rupees as his capital. Therefore, this is his opening capital, that is, which he brought in on 1st April 2021, rupees 10 lakh. Now, this at the rate of 10% per annum for full year, he would be entitled to rupees 1 lakh as interest on capital. Thereafter, he further introduced capital of 2 lakh on 1st October. So on 1st October 2021, he has brought in 2 lakh. So on that 10%. So this particular capital that he brought in was there in the business from 1st October 2021 till the end of the year, which is 31st March 2020. So calculate the number of months from 1st October 2021 to 31st March 2022. So October month included, so October, November, December, January, February, March. So it was there invested in the business for 6 months. So now you calculate this. You find that he is entitled to 10,000 rupees as interest on capital on this particular 2 lakh that introduced on 1st October. Finally, he also withdrew 1 lakh on 31st December. So 31st December 2021, what happened? He withdrew 1 lakh. So on this 1 lakh, at the rate of 10%, as is withdrawn on 31st December, so January, February and March, 3 months, this 1 lakh was not there in the business. So for those 3 months, you should not provide interest on capital. Whereas here on 10 lakh, entire amount we have provided. So we have to remove this amount from the total interest on capital. So calculate this way and you find it is 2,500, which is not entitled. So once you remove this, 1 lakh plus 10, 1 lakh 10,000 minus 2,500, you get 1 lakh 7,500 as the total interest on capital which Vikram is entitled to. So this is one way of calculating. Now, there's another way in which you can calculate. The same thing I will show you the second method of calculation. Here we know he introduced rupees 10 lakh, and when was it introduced? On 1st April 2021. Therefore, this amount was there in the business from 1st April 2021 to when? Till the time he introduced additional capital, he introduced additional capital on 1st October. So till 30th September 2021, this was invested. So therefore, the amount of interest he is entitled to would be on this 10 lakh, he would be entitled at 10% for the 6 months, that is April, May, June, July, August, September. 6 months he will be entitled to interest on capital. So calculate, it would be rupees 50,000 that he is entitled to on this 1 lakh which was there for the 6 months. Then what happened on 1st October 2021, he introduced extra 2 lakh. So now this 10 lakh has become rupees 12 lakh. So this 12 lakh was invested from 1st October 2021 till when? Till the next activity in the capital. That was on 31st December when he withdrew. So till 31st December, this was there in the business. So he is entitled to 10% interest from 1st October 2021 to 31st December on this 12 lakh which was there in the business. So that is for 3 months. It's October, November and December. So calculate again. That would be 30,000. 4 ones are and this is 30. Finally, he withdrew on 31st December. So this 12 lakh now has become rupees 11 lakh. So 11 lakh capital was there in the business from 1st January 2022 till the end of year, that is 31st March 2020. So calculate the number of months: January, February, March. 3 months it was there in the business. So you see like this. So it comes to 1,10,000 by 4. So that comes to 27,500. So total it would be 1,07,500. This is the total interest on capital which Vikram is entitled. So now you see under both the method you get the same amount, only the method of calculation is slightly different. So I hope with this the concept of interest on capital was clear to you. This was just an introduction. Further, I'll be uploading videos on detailed discussion of computation of interest on capital, like in different situations, and practical solutions will be provided to you for those questions. So if you found this video useful, please do like and share it, and if you have not yet subscribed to the channel, please do subscribe to the channel to get continued notifications of all the upcoming videos so that you don't miss out on any videos which I'll be uploading soon. Thank you all. Have a great day.